Ladies and gentlemen, welcome to the PayPal earnings live stream. Welcome, Roy. You excited for this or what?
Yes, yeah, I'm very excited, especially that SoFi and PayPal are not reporting at the exact same moment. That's really nice. Glad we can cover it
Is it
live.
coming out of the is it coming out of the right mic?
Probably, yeah. Let's see.
I thought you were bringing your good
Probably
mic.
not. Um,
People are saying it's a beat already. Let's see here. I'm gonna keep it updated. I'm not seeing anything just yet.
All right, they're probably a little bit better.
It is beyond better. Yeah, how you doing?
Good. How are you?
Doing great. Doing great. But people are already saying it's a beat. I think maybe this guy is just excited.
Well, it is up 5.57%, so they could be just seeing the price action, or it could be posted on Bloomberg a little early.
Yeah, I think
Sometimes that
Bloomberg has
happens.
it before I do.
That's why people pay so much, is so they can get those slightly earlier results, maybe.
Right? That up 5% is coming down quickly though. Here, I'll share my screen there. And then whenever we get the
I think
actual
it's out.
numbers, we can switch over to that. But
It's out.
oh, I have it here. Yep. Okay. What do we want here? Revenue 8.36 billion. So 4% beat. EPS was $1.19, 5% year-over-year growth. Free cash flow was 2.2 billion. And now the stock is down.
Of course.
Gotta love it.
Yeah.
Gotta love it. Like I said, this will be the really important quarter for me as a shareholder because this is going to be when I decide to keep this company or give up on the story. But let's find out because a lot of it's going to hang on 2025 guidance. PayPal key messages. We want to return to profitable growth. Transaction margin dollars excluding interest on customer balances was up 5% for the full year 2024. We're making progress scaling checkout enhancements, improving PSP profitability, and monetizing Venmo.
Oh, wow. Sorry to interrupt, but yeah. So I'm looking at the quick sheet on page 2. It's cash flow. Fourth quarter 24 cash flow from operations of 2.4 billion and free cash flow of 2.2 billion, which brings the free cash flow to 6.8 billion for this year. Just phenomenal, 2024.
But was there something for that, or like a single expense or something that, or not a single expense, but like something that ended up marking that up, or there actual?
I don't believe so. That's the actual. Yeah.
Wow.
That's a significant beat, actually.
Stock down. Oh no. Sorry. I mean, yeah, it is down. -3%. Sorry, my thing was not updating. Okay, let's continue on here. Active accounts, 434 million. Okay. Monthly actives, 229 million. Yeah, all this looks like PayPal. Actually, transactions per active account, not seeing any growth there is pretty unique, actually, for PayPal. They've been on a pretty good string of consistent growth. Yeah, I'm going to have to plug in all of this into my spreadsheets to see the growth over the very long term. But let's check out full year 2025. Tell me what you think here. Transaction margin dollars, another 4 to 5% growth for between now and 2025. Free cash flow is 67 billion. EPS 480 to 495. Um, yeah, share repurchases 6 billion, and CapEx just around $1 billion.
Yeah, that free cash flow is really nice to see continuing to increase to 6 billion to 7 billion. Keep in mind when PayPal does guide, it usually does so very conservatively. So it's very likely that it will beat, of course, these numbers that it's being put up to.
Right. Okay, let's see here. We already read all this. Focused on scaling adoption while driving innovation and efficiencies in full year 2025, and more to come on Investor Day. I am really excited for Investor Day, but I don't see the return to growth, to be honest here.
Well, you're looking at mostly the top line numbers, and we need to remember, and if somebody's just kind of tuning in here and like, wow, that doesn't seem like a growth company. Part of the what's happening with the top line revenue is they're doing a mix shift. Not a mix shift, that's the wrong word. A shift in Braintree strategy, whereas before it was revenue growth at all costs, whether it actually fed the bottom line or not, which is silly. And they say no. Instead, we're offsetting some of that revenue growth for higher margins. And so that's one of the reasons why that transaction margin dollar, scrolled back up, previous slide, is increasing, at a faster rate than the revenue growth. But that's transaction margin dollars is basically what they use as net dollars, essentially. And that's one of the reasons why free cash flow is reaccelerating. Good to see them reiterate share repurchasing. I think that they had 4 billion left, so that's an increase. If you scroll up one slide as well, no, that wasn't it. As far as active accounts, they were close to an all-new record. 435 million is their previous all-time high a couple of years ago during COVID. So this is pretty nice growth. I was hoping that they post a all-time high so that the market would be like, wow, this is
Right,
even though active accounts isn't the most important, it's still pretty important. So, but it's showing continued growth there. So no, this is good.
Yeah, but I wasn't just, I was looking at the transaction margin dollars for which they're guiding for 4 to 5% growth. So yeah, the one thing that is still super impressive, but it just doesn't fit the narrative, is the share repurchases is going to be crazy, and they'll probably beat this too, which is mind blowing. Because if the free cash flow can get to 6 to 7 billion, the share repurchases is going to be 6 to 7 billion.
Yeah,
so that's really, pretty crazy. I think that the overall outstanding share count for this company. Actually, do we have that on these slides? No, maybe not.
Sometimes we have to get the SEC.
Diluted share count for December. So we're not under the 1 billion mark just yet, but on our way. But it will be, and that's going to continue to climb down and make the average price that people pay for this company just, the stock price just go up artificially, even if the financials are flattening. But yeah, I'm more excited to hear the call and want to hear some stuff there as well.
Yeah, margin's interesting too. You can see the transaction margin year-over-year change went up by 128 basis points in quarter four. That's through that Braintree strategy. That's good to see. That was one of those bearish concerns that people had, was, the margins always are going backwards. It's like, well, no, it's actually improving. So that's really good.
Why? What do you not like? What why is the stock down 4%? Because I think it's a guidance problem.
Maybe. I haven't seen anything yet on Fastlane products, so they're probably not guiding much in the way of those. I know that there's a slide that mentions, that hey, they're doing this, but I expect a lot of that's not priced in, especially the advertising, which I think can ramp a lot faster than Fastlane itself, just because they're not they're trying to scale Fastlane more than monetize it at this point. Um,
That's the thing, right? It's like they said that they weren't going to, or they had no expectations of turning that on in 2025 or something. If they do, there'll probably be a massive beat on their revenue side, at least. But
yeah.
who knows? I mean, they might have a different strategy for when they actually want to roll that out.
Yet I'm not sure if the market was thinking that they would guide a lot more aggressively than this, but they tend to be pretty conservative, especially with these brand new products that they want to make sure that they're tracking well before they actually build them into guidance. So we saw basically all the way through the year that, they initially didn't do guidance, and they begin to do quarter over quarter and always raise guidance beyond what was expected. So I think that we'll probably see more of that as well. But that's one of those big focuses this quarter for a lot of companies is guidance, and it is important. But yeah, it's actually pretty much in line with everything that I was looking at. Some numbers are a little bit higher, some numbers are a little bit lower, but it's right there. So yeah, I'm not sure what the market doesn't like.
Is it possible for you to share your screen? Because I'm going to plug a couple numbers here, and then we can pull up a couple additional slides later on.
Yeah.
Monthly active accounts, by the way, I'm just looking at their previous slides. Like, monthly active accounts was crazy at 229 million. That's very high. That's a change of 6 million, and 5 million higher year over year. So very exciting there.
Yeah, that monthly basically shows a trajectory of where they're going as a business. You can see maybe they didn't hit an all-time high like they had in fourth quarter of 2022, but the monthly is tracking the direction that they're going. Part of that too is seasonality, but that I believe they have not always tracked monthly, but that should be a new record for them. And it's I'm sure that they'll speak on this too, but they'll talk about the trajectory of some of those new initiatives that they have too.
What was there any shareholder notes or
yeah. Let's go to that then.
Because that would be interesting to see some of their commentary.
PayPal had a strong finish to a successful 2024 with results better than we expected. We set out at the beginning of 2024 to narrow our focus, improve execution, reposition the business. 1 year later, I'm proud that we've laid a strong foundation for long-term profitable growth across the company's most important areas. The improvements we made to branded checkout, peer-to-peer, and Venmo, plus the progress we made to our price-to-value strategy are beginning to show up in our results. The strong momentum we've created sets us up well for 2025, which is about scaling adoption. I'm excited to share more at our Investor Day later this month. And so last year's mission was, about driving profitable margin growth. They saw that. So this year is about scaling. And then as they scale, it seems like that they'll perhaps the next year really look at driving revenue the year beyond that as well. Not that they won't be growing this year, but that's maybe one of those things that the market doesn't like is they wanted it immediately right now. But with Fastlane especially, I think this is the right strategy for that product because it's not like their payment processing product with Braintree where, it's like, oh, there's going to be multiple winners in this space and you're not going to take all. With guest checkout, you can take the whole market. You can have the best product. You can take the whole market. There will be other players, but you can have the lion's share of that. And so if they're able to capture that and they have a chance, they're well positioned to do that. Great product, great partnerships as well. That means a lot more than just trying to milk that for every bit of revenue they can get this year. So I think that's a good strategy. Let's see here. Prior year updated. Yeah, you can see the EPS growth there too.
Yeah, I mean, me plugging these numbers, it obviously is a strong quarter. I'm trying to look quarter over quarter though, year over year because Q4 is a little bit different. I'm just a little bit interested in the website traffic that they ended up seeing versus their total number of like either payment transactions or total revenue, I think was pretty different in my opinion. But
yeah, they saw well, and it could be too that the market, although it didn't seem like it priced it into the stock that much. They had a ridiculous improvement over last year in their Black Friday, Cyber Monday numbers.
right.
And so maybe the market was expecting, oh, it's the revenue is going to be up 18%, which, I mean, that's not realistic. That'd be great. But yeah, international is a little bit softer. That's one of those things that's kind of worth keeping an eye on. Cross border is about the same. Peer to peer as well. Down 8%. Huh.
Not the stock. Yeah, sorry. What you sorry. You quickly rushed to look at the stock. I was like, no way. But it actually just seemingly is sitting around -4%, by the way, the stock. Yeah, I mean, I really want to listen to Alex Chris now because I think there's a difference between calling yourself a growth company and then showing that you're a growth company. If you're doing 5% growth this quarter or this year, and then next year you're saying we're going to do 4 to 5% growth. What? I think that's a big surprise. I was hoping for a little bit more re-acceleration there.
Yeah, I mean, I was too. Yeah, so here announcing a new $15 billion share repurchase authorization. So that's new. That's one of those, the around 6 billion share repurchase in for financial year 2025.
Yeah. Yeah. Which I'm excited about. But yeah.
Yeah, I'm really curious, and I'm sure that they'll probably give this in the actual earnings call how these are doing. The PayPal Everywhere, Enhanced Checkout, Fastlane, the different partnerships as well. They did touch on that and gave us an early look, actually a little bit more detail in the slide last time. Driving progress across key initiatives. 25% of U.S. branded checkout traffic on upgraded experience, which is good. Actually, that's a lot better than where they were before. PayPal had been notorious when they would roll out a new product. It would just take forever to scale it. So that's really good improvement. Nearly 100% PayPal debit card total payment volume growth. They did back in September announce that they had over 1 million that had signed up for the debit card, which is pretty awesome. Venmo showing good growth. Accelerating on small and mid-sized businesses too.
What I always find so weird about PayPal, and this is the same thing that sort of Dan Schulman had a problem with as well, is that it would show, these types of improvements like, oh, we just made this upgrade. There's a 400 basis point increase on the new experience. We are now tracking for 25% of those people at a 4% conversion. But like the math isn't mathing, in my opinion. So like with the amount of new account increases, like the amount of transactions per user, the uplifts, I always just feel like their expectations for growth should be slightly higher. And honestly, that would have changed for me if they said 8 to 9% for next year. I would have been satiated. But 4 to 5% on a transactional margin dollar, whenever that is your sole goal, is disappointing. Like I'm just disappointed, and this is a crucial quarter for me if I'm going to be a shareholder.
Yeah, it seems like a lot of people are saying that in the comments too. That a lot of people are out, and that's fine. I was expecting maybe just a little bit more on the growth side. I didn't think they'd say double digits or anything like that, but they'll probably hit north of what they're guiding for. So I'm really curious now on Investor Day, of course, in the comments too that they have here, what they're looking at further out. Like if they're like, no, we're a growth company, but we're growing at 4 to 5%. That's not really a growth company. It's okay. It's not bad, but would like to see a little bit more. So
yeah, and the funny thing is that they will probably say something along those lines, like, "Hey, we are hoping for more as well, but we're going to be conservative about it." But like that was something that Alex Chris wanted to do because he was new and they wanted really achievable goals in 2024. 2025, it's like, okay, you've been in here a whole year now. So
there is a higher effective tax rate. That's one of those sayings, interest, but still you would think that reacceleration would grow beyond that.
Yeah. Especially with large companies like this, those are the things that can really impact your total growth rates. But yeah. Revenue from value-added services also didn't even grow.
Yeah.
That's surprising to me.
It's basically flat year over year it's up 5%, but that's not huge.
Yeah, it's flat quarter over quarter, but and yeah, that's interesting too on a Q4 basis, right?
Mm-hmm. Yeah, as far as this quarter, the strong dollar did not help them at all. That's why you'll see all the way through the report, dollar neutral FX in.
Yeah.
They've been doing that a while, and a lot of companies are running into that too that are international.
Yeah. No, that's going to happen on PayPal.
Yeah.
Like a lot. But there's also benefits to it as well, because if it was, they have a pretty diversified revenue stream. And if things get inflationary, then they're kind of a protection because they get paid on the amount of dollars that end up flowing through.
Mm-hmm. Here's that expected spike that they did guide for on sales and marketing. It's up 38%, but they said most of the sales and marketing expenditure that they've done on these new products, including the Will Ferrell commercial, would hit in Q4. So that's shouldn't be a shock to the market, assuming they were paying attention. General administrative up a little bit. They do have some new hires as well.
Yeah. Stock down now 6.6%, 6.2% now down. So yeah,
that free cash flow. I'm a big free cash flow guy. Like, this is really good. Yes, it's technically less than Q4 of last year, but Q4 last year they had happy returns. They had one other thing that also was a one-time impact on their free cash flow. So under Alex Chris, for the longest time, free cash flow was just stable and didn't increase at all. And under Alex Chris, it's actually growing again, which is really, really good.
Yeah.
Hedging.
Okay, sorry, I'm just still plugging some numbers. I'm trying to find a couple metrics here. Did you see what their transaction margin was? Now that we have transaction margin dollars, 47% on transaction margin.
Mm-hmm. It's good.
I'm actually that. That seems really good.
Yeah. It looks like that 45% that we saw in first quarter of 24. That's probably the bottom. This could go. Although their strategy with Braintree, last time they touched on Venmo actually adding to this instead of subtracting away from it, which normally it had been. But that's headed in the right direction.
Yeah, I'm actually really surprised that the market hates that, because that used to be the point that the stock would sell on was transaction margin, but it's really taking a turnaround now. So I wonder what their expectation, if transaction margin is coming up and potentially, hopefully that continues into 2025, but what their revenue growth rate is expected for 2025. If you're going to see 4 to 5% growth in transaction margin dollars, what's the breakdown between top line growth and margin expansion? Because with the transaction margin dollars, you're essentially looking at an adjusted top line.
Yeah. The only thing that I'm really seeing that the market might not be happy about is the guidance, because like everything else just looks a little bit better than expected, and some nice beats and some like actually really nice surprises too with free cash flow where it's at. Almost $7 billion in free cash flow. They've guided for essentially that for the next year too. So maybe that's one of those things in that shifted strategy. But no, I would have expected, if you were not telling me the numbers, it'd be like, oh yeah, it's probably flat. But we're down 6%. So it is pre-market. So anything can happen with the comments. I wouldn't expect this to pump to like, 100, 150, anything like that anytime soon. But we'll see what the comments say.
Yeah. What's always a little bit nerve-wracking for comments from PayPal is like with Elon, you can always expect he's going to try to pump the stock. Alex Karp always going to be very positive. But Alex Chris is a positive person, but then Jamie comes on, Jamie Miller, and she'll tell you how it is. And she'll say, well, you know what? In 2025, we're probably going to be a little negative here. These aspects are going to be real headwinds. And it's like, okay, yeah, we know, but you didn't have to say it.
Yeah.
But
and they, Chris, I think does a lot better too, just speaking off the cuff. The canned comments, which they need to have too, but they're just like, that doesn't get anybody excited. But the extra commentary, and actually Jamie's like details are really good. So no, I think that the call will be good. It wouldn't shock me if PayPal just kind of finishes flat on the day, depending on what the macro does today. But
yeah.
I'm seeing some people say they're disappointed to only see buybacks instead of heavy investments into new tech. Well, the reality is they are investing heavy into a lot of new technology and new products. So they don't. That doesn't mean that they need to spend every single bit of their free cash flow to ramp that. Like if they, but they are increasing their spend. That's one of those things that we saw as a bump this year, especially in Q4. But a lot of what they're able to do too, as far as their products, are just using what they already have built up, like the data that's been sitting there. With the advertising business in particular, that doesn't take them spending billions of dollars to build that up. So they are building that. They're working on that. Hopefully we'll get more of an early read, especially on the advertising. They don't really mention anything here, and it's a little bit early for it, but not too early to have some mentions.
Can you find total take rate? Just trying to search in the press release for a take rate, and it's not finding it.
Page 15.
Okay.
Yeah, 1.91%. So it's continue to inflect upwards, which is good. And transaction take rate also improved. So
what's the transaction take rate? I'll just ask you.
It's 1.73%.
1.73.
Mm-hmm. Yeah, I mean it's a good quarter. Is it their most amazing ever? No, but it's a good solid quarter. Guidance is conservative, but we've kind of come to expect that with PayPal. I don't know that it's overly conservative because they are shifting their strategy with Braintree, so that's slowing their top line revenue growth.
Yeah, which they said would happen.
Yeah,
but it's transaction margin dollars. That's like, I don't know. They said that they wanted to shift away and that would kill their revenue, but they're going to look for transaction margin dollar growth.
Mm-hmm.
I'm just wondering, just on a personal note, should I potentially take a more modern approach to payments? Because I still want payments, and I think the best player in payments, tell me if you disagree, is Adyen. expensive
for white
but-
label. Yeah, I
Right.
think so. I think Braintree is improving. I personally think that it's up to par with Stripe, although some different features. But yeah, Adyen is just, it's tough to beat.
Right.
But the nice thing is, like, that's one of those products that it's not just winner take all. But even with Shopify, for instance, like they're like, hey, 3 payment providers now, just for that redundancy.
Well, that is what's really interesting is the partnerships that they have pushed through this year is insane.
Mm-hmm.
When are you going to see that growth, though? Because I would have suspected that would have increased growth a little bit more. Now, I know that PayPal is so big that these partnerships make up for fractions of their overall payment volume, but I don't know. Partnerships or they're just simply not even showing up at all because Fastlane is not being monetized yet, but it's not being additionally monetized. It's still going to be monetized at a PayPal rate.
Mm-hmm.
So Shopify, Fiserv, Adyen, Buy with Prime. What other ones am I missing? All of those are all brand new partnerships. Or expanded partnerships, I should say.
Mm-hmm.
Jesse Dow in the chat said, X Payments is coming this year. These guys better move soon. What do you think about the X Money Elon Musk risk?
There's no risk there. There's other risks, there are other competition, but X Payments, we've talked about it before, but in the West, there doesn't seem to be any desire to pair social media with payments. And I think especially as political as Elon Musk has made himself, whether that you like that or not, like a lot of people will not trust Elon Musk product that is that type of thing. So I don't think it's going to gain much traction. They should use it internally, certainly on Twitter. And some people use it and enjoy the experience. I'm sure it'll be a fine experience, but is it going to really, that what they're coming out with seems like it's more like a Venmo or Cash App type product. And those are not like the big money makers. Well, at least Venmo is not for PayPal. Like, will it slow Venmo growth by 1% or 2%? Yeah, maybe, but it's not. There's not really that much overlap with what PayPal does, and they're not going to back end, the whole payment feature like Braintree or anything like that. There's no talks about that at all. So,
yeah, I've never really took too much risk looking at companies that like aren't here yet. So I don't know the features yet. That's the problem is I look at it like, okay, well, it might, and it's a Elon Musk product, so there's a large potential for disruption. But we don't even know anything about it other than they're partnering with Visa Direct, and PayPal's on Visa Direct as well. So I don't know. I'm interested to learn more about it, but yeah, I'm not looking at it too much as that's the reason why there's potential concerns. But yeah, stock is now down 6.25% as we get closer to the actual earnings call here, kind of settling. At one point, it actually hit $95. I think the original algos sort of saw the beats on revenue, and then they kind of kicked away once people scroll directly to guidance.
Oh, I think it was more like, hey, we saw the beats. Great. Oh, wait, this is PayPal. We're supposed to sell that off on our
Yeah. They saw cash flow and they were like, okay, cool.
Yeah.
But PayPal can't survive an earnings, so.
Yeah, I mean,
great.
like, honestly, though, the only thing that I'm seeing, I've not gone through with a fine-tooth comb or anything, but that it might not be liking is that guidance. But the guidance it's not bad. It's not, mind-blowing guidance that maybe the market was hoping for. But yeah, no, I don't know. I think that the market's gotten this wrong, and it continues to get it wrong. So,
Yeah.
oh, here's Alex Chris's comments. Let me share
Jesse, I
those.
agree with you that Elon Musk is one of the greatest innovators on earth. I'm interested to see it for sure.
All right, so here's what Alex Chris says. We set out to make 2024 a transition year. 1 year later, I'm proud to say that we've laid a strong foundation. So transaction margin dollars up 7%. Branded checkout growth accelerated. Braintree Mini Food contributed to our transaction margin dollar growth over the last 3 quarters. That's that new shift in strategy. This one was interesting. Venmo monetization is making great strides. Over plus 20% growth in Venmo debit card and Pay with Venmo monthly active accounts. And we've hit an inflection point on active accounts, which grew plus 2% in 2024. Strong momentum we've created sets us up well for 2025, which is about scaling adoption. And hopefully they'll talk a lot more about like what that specifically means. We see that in some of the guidance as well. But no, like that's basically our strategy is Venmo was not really contributing to that bottom line much. Braintree also wasn't. And so they've shifted the strategy, and it seems like those are bearing fruit to the bottom line. Market would like to see more. I would like to see more too. But no, I think that this is good, and it sets the stage up well. Basically, this is sustainable. Like the strategy that they were on before was let's grow active accounts by whatever means possible. Let's grow revenue by whatever means possible. If it means that PayPal makes less and less actual money over time, so be it. And that's just silly. There can be seasons where you just really scale products, like Fastlane is one of those, and it may eat a little bit even into the bottom line as you're scaling that out. But you need to have a way to actually monetize, not just hope that it works out. I'm not made a video on this, but I was looking at their investor day from 2021 under Dan Schulman,
Right.
and it spent probably half of the time talking about what they did in the past that they're proud of. And a little bit on the present and just a tiny bit in the future, but mostly it was just like, look at all this TAM that's out there. This is great. No real strategy and actually how to get there. They actually have a strategy now. So.
Yeah. So depending on what is happening in the earnings call, are you going to be buying this dip? Are you, what's your feeling right now?
Yeah, I need to hear the comments, but unless there's something that I hear that I really don't like, I will be buying this dip. Sure, I don't mind adding to this. I wouldn't, at 83, 89 is where we're at right now, so down 6.28%. I'll begin buying it, probably on a weekly basis for a while. So,
got you. Yeah, I'm interested to hear the call, but PayPal's been an interesting one for me. I thought that this was going to be a much faster turnaround play. Alex Chris comes in, shows, potential margin expansion, top line growth, especially these sort of things. And then the market would begin to appreciate them for what they could be. This is like a really see it out. This could be a 2026 play. Who knows? I'm even before this ended up coming out, I was on my live stream yesterday, and I said, this is going to be a pivotal quarter, and I might actually end up selling if it's not showing growth for 2025. And I could potentially see myself selling out and just putting it into Nvidia because I don't know if it holds a candle to the growth that I could potentially be seeing there. I don't know. These are just my thoughts. I feel a little bit without hearing commentary from management, but a little let down by the guidance. If you're calling yourself a growth company, I want to see some growth.
Yeah, and honestly, I expect most folks are just frustrated with the price action, which I get. It's PayPal. We call it that for the reason. Yeah, I mean, it's a pretty different company, right? Like Chris is talking about this as being a growth company, and well, they need to show that to really have the market buy that. I don't think this is a mess. I think this is a good quarter, But we're not seeing the acceleration like we'd like to see for the guidance anyway.
Yeah.
15 billion in buybacks. That's a large amount of their market cap. It's not all over 1 year, guys. So keep that in mind.
Yeah, it seems like a 24-month thing that they're going to be doing, because they said they want to do 6 billion this year. That'll probably, if I was to guess, that would probably be 6 to 7, or potentially even 7 to 8 if they also beat on cash flow, which will probably happen over the next year. And then they'll finish out that buyback next year. So
yeah, that's kind of how I see that too. Probably somewhere around 7 billion this year and 8 billion next year. But maybe slightly less. But yeah, that's still pretty crazy buyback. Like that's one of the frustrating things for me is that a company like Apple, which has tons of cash, and they're like, oh wow, look at this amazing buyback. Dude, that buyback is so small compared to the yield for PayPal. The free cash flow is so small compared to what PayPal is doing, but the market doesn't really care. It's like, oh, PayPal, who wants that?
Right. And I hope for a narrative break. I mean, there's still crazy opportunities with them going into the what you have to remind me the name, the Apple NFC technology that they're able to access. I forget what that was called whenever they opened it up, but and so the real omni-channel opportunities for PayPal could expand greatly. And then if it's a direct competition between Apple and PayPal for who has the better consumer digital wallet, PayPal could really show a lot of features that would entice a lot of new users. On top of all the partnerships that they're finding across the world of payments, there's so much potential for future growth, and turning around a brand name that potentially investors had forgot about in 2022. But now I'm just thinking we're at such a pivotal moment in other like big semiconductor fan, big robot fan, big autonomous vehicle fan, and PayPal can't be putting up 4 to 5%. You got to show me expanding growth. I'm getting.
This could be something else if the market doesn't like, but it shouldn't shock them because they guided for this. But non-transaction OpEx is up 10%, and that's people said, oh, they're just doing all their money and not doing any innovation. Well, no, this is from the innovation, and so this is including marketing, of course. So part of that is a one-time bump in Q4. Some of that is expenses going forward too. So OVAS was the other thing that was kind of interesting that Tanner pointed out. Plus 5%. That's year over year, not sequentially quarter over quarter. And a lot of that's because of interest on customer balance. So that's not amazing. It's not bad. It's like not quite as good as we were hoping for on that.
Yeah. Okay. We have the call coming up in about 15 minutes or so. Yeah. It always sucks reporting, especially on PayPal. Whenever there's another company that's doing so well, I'm like, God, this is such a PayPal curse. Every time there's another company that's doing great. And today it's Spotify is up nearly 10%. PayPal down 6%. Well, actually, I think there was maybe one quarter last year that really excelled on earnings. I forget which one that was.
Oh, Q4 was amazing, but the market sold it off. So a year ago.
No, but I mean, in the markets.
Okay.
What was the quarter that really surprised on the financials?
I think maybe it was Q1. It was close to the beginning. It was either Q1 or Q2 this last year. So, and guys, I'm not like, if you're like, I see some people like, why are you so sad? Why are you so dejected? I'm just tired. I've slept like 3 hours last night. So,
yeah, that you're completely right. I mean, half of this, I'm not depressed or anything. This is investing. This is tiredness. This is 6 hours, and I get 8. But it's PayPal, and I want to be with Roy, so I woke up early. But yeah. Roy, let's hope for some good, which, by the way, has happened. Alex Chris in his comments have turned around the stock before. Okay.
Yeah, I mean, like, I really do think that we're going to go back to where we were. That we'll be right around 90 by the end of the day. Could be wrong. If macro's really bad, that's not happening. But yeah, I'd be surprised if it remains down, because this is not bad at all. It's just, if I was giving it a grade, and it's a little bit premature because we hadn't heard the earnings call, and I think there's going to be additional color there. It's basically the same grade as I'd give SoFi. It's B. Maybe I gave a B. Did I give a B plus to SoFi? I'd just say this is a B grade. It's good. It's decent. It's not like shocking me. That's the word that maybe we should avoid using. But
you just compare this quarter to PayPal's quarter, or to SoFi's quarter.
Oh yeah, it's like the guidance.
The guidance is the same. The guidance is both not the best, but I think that SoFi's numbers in the actual quarter were like real surprising.
That's true, yeah. But the guidance was also real surprising the other way, and the tech platform, like basically things that I was really focused on with SoFi, they disappointed me in. Here, PayPal, like one of those. There's not really anything that's disappointing me other than maybe just being a little bit softer on guidance, but that's not a surprise to me at this point. I was hoping, but I didn't. I thought it was like going to be close, that they'd hit that 435 million active accounts. They hit 434 million. Looks like that they're on track based on monthly active users to see new all-time high in active accounts probably next quarter, I'd guess. And yeah, like everything, like free cash flow is very, very good. I'm very pleased to see that. Very pleased to see the buybacks basically reiterated and accelerated. If the market wants to keep it down here for long, like I don't see it. Barring macro, just smashing it. Like I think that we'll actually see 100 soon before next quarter. A lot of that does depend on Investor Day, and that may be the other thing too. Investor Day is coming at the end of this month. If I was I'm actually saying this as well because Tanner asked me, he's like, "Hey, am I buying this dip?" I haven't yet. Obviously, I'm in this call, but no, if we're around here, I'll continue to be averaging it. I hadn't bought any PayPal in. I did buy some in January actually, but not. I think there's just 1 week where I was a buyer, and outside of that, just waiting. And that's all largely where I'm at as well with Investor Days. I really want to see what they do for Investor Day. I think that Alex Chris is a visionary. They actually have a plan. They have a roadmap. It's not just a look at what we've done in the past and look where we're at right now. And hey, there's some TAM out there. We hope we get it. So I think that they'll have really, really clear checkpoints and a roadmap laid out with what they're trying to do. They wouldn't be holding Investor Day otherwise. It's not like it's an annual tradition for them. So my guess is, as far as institutions, they're probably like, these are good numbers, but let's just wait and see what Investor Day says, and then maybe we'll get excited if there's something in there to excite them, and I think that there will be. We'll probably get some glimpses of that, frankly, in the call too. But like one of the things that I haven't seen here at all was any mention of the advertising platform, number of Fastlane accounts. That's another one. They did mention it in the call last time, so those will probably be mentioned there.
Yeah,
but that's important.
There are so many potential future products for them to get into, and even the stable coins were supposed to be such a margin. Just really lowering the cost for them on whether it's paying their vendors or cross-border payments. So there is a lot of real potential. It's just the speed or adoption of those products. Maybe they are slower than I anticipated. I definitely thought that those would be 2025 initiatives.
Yeah, stablecoin, frankly, that's disappointed me. This year I've stylized as the year of stablecoin, and we're seeing that with a lot of the early headlines as well. Part of that is to the shift in the SEC and that strategy and how they treat that. And there's differentiation, with Basel III as far as stable coins versus other coins as well in banks holding them. But I think that we're going to see a lot of payment systems really open up and operating and payment rails being developed on stable coins. And PayPal has a really good coin. It's authorized. Authorized is the wrong word. Run by Paxos, and so the market cap and everything that's fine. But like me, I want to see them use that coin a lot more in-house in their systems. They do use it for Zoom. They do use it in their PayPal venture fund, and a little bit outside of that. But yeah, largely it's been we launched it and we hear like little bits and pieces, but it doesn't seem like it's all put together yet. So that's probably something that I'm guessing that they'll wait and talk about on Investor Day. If they don't talk about it at all, it's like, well, maybe the stablecoin isn't as meaningful as it should be, but it should be phenomenally meaningful with the way that PayPal is positioned across the industry, and also the fact that they will have their own payment. Let's see, okay, is that something new?
Very, very nice that they put you in here.
Yeah, that's a good shot of me.
Yeah. In Q4, PayPal delivered another strong quarter to finish a transformative year. TPV of $437.8 billion, up 7%. Net revenue went to $8.4 billion, up 4% on a spot and FX neutral basis. We covered a lot of this already, but yeah, non-GAAP EPS $1.19, up 5%. But I wanted to read these Alex Chriss comments here. President and CEO Alex Chriss said, PayPal had a strong finish to a successful 2024 with results that were better than we expected. We set out at the beginning of 2024 to narrow our focus, improve execution, and reposition the business. 1 year later, I'm proud that we've laid out a strong foundation for long-term profitable growth across the company's most important areas. The improvements we made to branded checkout, peer-to-peer, and Venmo, plus the progress we made on our price-to-value strategy, are beginning to show up in our results. The strong momentum that we created sets us up well in 2025, which is about scaling adoption, and I'm excited to share more at our Investor Day later this month. What do you think about that?
Yeah, no, it sounds like that. Investor Day, I think, is really going to be key to set up that long-term vision. I'm glad that, by the way, that they did full year guidance. That's absolutely the right move at this point for PayPal, even if they don't want to bake everything in. But yeah, no. Last year, was about stabilizing the margins. We've seen that they've done that. Now they're scaling, and then the year after that, we'll see. We'll have to probably wait for Investor Day to hear that, but that's probably when they really begin seeing that acceleration in revenue.
Yeah.
It's a multi-year thing, and you have to remember too. And somebody else had pointed that out in the comments. Like, this is a massive company. It can't turn on a dime.
Massive.
Alex Chriss is doing a lot of changes fast, and you always wish as a shareholder, it's like, oh, I wish it was faster. But the larger the company is, the older the company is, the longer it takes for it to turn around. It's like driving a vehicle. If you're driving a tiny little car, it can turn on a dime. But if you're driving a semi truck, it doesn't do that. Right. So, I don't think that this is, before Alex Chriss, it was just like, well, we hope that they can turn it around. Now it's like, well, we see the turnaround happening. They have a good strategy. They have good leadership. Wish it was faster? Absolutely. But no, this is good.
Yeah. I've got the earnings call up, so we're going to transition over there soon. But in the meantime, while they're playing music. They asked me, do you want us to play lobby music? I say no, and then they play it anyway. Yeah. Okay. I have a couple charts and stuff that we could go through, but I don't know if we have enough time or anything.
Well, we can stop halfway through once the call begins.
Okay. Bear with me. I just need to put in the only number I couldn't find. Actually, yeah, just give me one quick second. I'm just going to look for this one. Actually, didn't find stock-based compensation, but that'll take no time at all.
This is also the last quarter. So they did a shift this time last year when they ended up moving. They're changing the way that their EPS is reported. So instead of with their adjusted EPS, removing all of the stock-based compensation, they added that back in. And so when PayPal reported last year for the first time that, even though they had announced and they said that they're going to do that, the algo saw it as a miss, even though it wasn't a miss. So that's kind of the nice thing, is that this is the last year of them reporting against numbers that were entirely different in the way that they were given.
Sure.
And so the last of the apples to oranges type comparisons. So glad to see that.
Apple? Did you say Apple? Yeah, no, I agree. Okay, let's show this off really quick. The only other number I didn't get was non-GAAP effective tax rate in Q4. Was that 23%? I don't remember what it was. I just remember seeing what it was for the guide.
21% for 2024. But I don't see a quarter.
Oh, yeah, you're right. 21%. Okay. Let us take a look at this then really quick. And I've got the earnings call in the background just before we get started. I'll change this over to day mode. Sorry for the flashbang, everyone. So first things first, the total amount of new members. This is what Roy was talking about. If we could have just beat out the new old high that we've had, then that would have been very exciting. But going from 435 down to 426, and then re-accelerating back to 434 million is a very good sign. And the real, and probably more important statistic is the monthly active user hit a brand new high. Mm-hmm. So 229 million users. Total payment volume is accelerating always. So that's very exciting. It's not just a Q4 phenomenon, but we saw newer highs in Q3 and Q2 before it, and hopefully that continues. There'll probably be a slight lower drop in Q1, as there always is, but hopefully they continue to push new highs there. Why don't I have... It's not showing revenue here?
Guess they didn't make money this year.
No, they made no money this year. That's just my fault. Probably plugged the numbers wrong. But total share count continues to fall off a cliff. Now, there's a little bit of a less of a drop this quarter, but that's also because the stock price as well.
Yeah, it's two things. They accelerated their buybacks in quarter 2 and quarter 3 a little bit more than you'd expect, if they're just doing it evenly across quarters, taking advantage of that lower share price. So
now this is what Alex Chris says is his main goal: transaction margin dollar growth, pricing to value. Mm-hmm. And it looks like it's working. And the margin is crazy. 47% is, we haven't seen that for a very long time.
Yeah.
So that's exciting, especially if they can continue to bring that back up. But we'll have to see.
I just realized the volume of transactions, and I'm tired, so I'm not thinking of the number. That's around 60, where it was flat sequentially. A lot of that too is them doing that shift on Braintree, and then having a lot of brand new users that are maybe swiping their debit card a few times, but that's not 60 times in a quarter necessarily. So I think that's probably why we're seeing that just kind of steady off for a bit.
What's with this? Oh, call is starting. We switch. All right. Let's pray. We will get some good earnings here.
Conference
good
is
results
being
here.
recorded. I would now like to turn the program over to your host for today's conference, Steve Winokur, PayPal's Chief Investor Relations Officer. Please go ahead.
Thanks, Sarah. Welcome to PayPal's fourth quarter
Make
and
sure you
full
mute.
year 2024 earnings call. I'm joined by CEO Alex Chriss and CFO Jamie Miller. Our remarks today include forward-looking statements that involve risks and uncertainties. Actual results may differ materially from these statements. Our commentary is based on our best view of the world and our businesses as we see them today. As described in our earnings press release, SEC filings, and on our website, those elements may change as the world changes. Now over to you, Alex.
Thanks, Steve, and thank you to everyone for joining us this morning. PayPal had a successful 2024, delivering strong operating and financial results. The improvements we've made to branded checkout, P2P, and Venmo, plus the progress we've made on our price-to-value strategy, are beginning to show up in our results. We set out at the beginning of 2024 to make it a transition year, to narrow our focus, and to make sure we are executing the initiatives that matter the most to the growth of our business. 1 year later, I'm proud that we've laid a strong foundation for durable growth. We drove branded checkout transaction margin dollar growth in each quarter. U.S. branded checkout growth accelerated in the fourth quarter to exit the year at a high point as our new checkout innovations are scaling to customers. Driven by a renewed focus on pricing to value, Braintree has meaningfully contributed to our transaction margin dollar growth over the last 3 quarters. Venmo monetization is making great strides with over 20% growth in Venmo debit card and Pay with Venmo monthly active accounts. Put simply, the PayPal team executed well during our transition year and made strong progress on our transformation. The investments we made throughout 2024 allowed us to perform well during the holiday shopping season and finish the year strongly. Total active accounts returned to growth in 24 as we enhanced our value proposition and brought innovation to market. Total payment volume grew 10% to nearly $1.7 trillion. We delivered $32 billion in revenue, up 7%. We reached an inflection point for transaction margin dollar growth, which increased 5%, excluding the benefit of interest on customer balances. Our non-GAAP earnings per share increased 21% year over year. We generated $6.8 billion in free cash flow and completed $6 billion in share buybacks. For 2025, we expect another solid year of transaction margin dollar growth and strong free cash flow, which Jamie will discuss. As we look ahead to 25, I want to share the areas we're most focused on. First is innovation. With the leadership team in place and the velocity with which we're executing, we've proven we can bring innovations to market. In 2024, we rolled out new branded checkout experiences, launched PayPal Everywhere, introduced Fastlane, and expanded PayPal Complete Payments. We are not stopping there and will continue to innovate to solve our customers' biggest challenges. The second is product adoption. 2025 will be focused on scaling adoption of our innovations. We have world-class products and solutions and will continue educating customers about all we have to offer. In 24, we completely revamped our marketing and go-to-market playbook. We're just scratching the surface, so you can expect more ahead. Third is partnerships. Last year, we formed significant partnerships to drive Fastlane adoption and bring more value to customers. We are building on our leadership position in payments and commerce and establishing ourselves as the platform that leading brands want to work with. We will strike even more partnerships throughout 2025. Fourth is efficiency and effectiveness. In 2024, we reduced headcount by 10%. We made deliberate investments in AI and automation, which are critical to our future. This year, we are prioritizing the use of AI to improve the customer experience and drive efficiency and effectiveness within PayPal. We expect to make meaningful progress on all 4 of these areas in 25. Let me walk you through how this focus will drive our results this year and beyond. In 25, our key strategic initiatives, will be to win checkout, scale Omni, grow Venmo, and accelerate SMB. Our teams are organized around these priorities and tracking progress daily. Starting with win checkout, our number one priority. With our upgraded experiences, we now have the leading checkout solution on desktop and mobile. When fully implemented, the upgraded experiences reduce latency by more than 40% and drive more than 100 basis points of conversion lift on average, consistent with the early results we've shared. These upgrades are now live for more than 25% of US checkout traffic, which is up from 5% last quarter. We have a lot of room to grow here as adoption increases in the US and then expands globally. On top of the benefit of higher conversion, these new experiences improve the presentment of our branded marks and solutions, like Buy Now, Pay Later, which can help to expand our share of wallet. BNPL customers spend 30% more on average, and merchants see higher sales after adding BNPL messaging to their sites, which is critical when one more sale can make all the difference. In 2024, we drove approximately $33 billion in BNPL total payment volume, growing 21% from the prior year. Consumers and merchants trust the PayPal brand and experience. We have a lot more we can do with BNPL in the next year. Merchants continue to show strong interest in Fastlane. In the fourth quarter, we focused on selling Fastlane to large brands that can drive future volume. I'm excited to share that we have signed NBCUniversal, Roku, and StockX and are working on implementation. We now have nearly 2,000 merchants up and running with Fastlane. We expect an inflection point in adoption when we expand our go-to-market efforts and bring Fastlane to even more merchants through Adyen, Global Payments, and Fiserv this year. From early data, what's exciting is that 25% of Fastlane users have never had a PayPal account before, and more than half have a PayPal account but haven't been active in the last 12 months. To say that simply, 75% of Fastlane consumers are new or dormant PayPal users. This means that Fastlane not only improves conversion for our merchants, but also introduces more shoppers to PayPal and enables us to re-engage inactive users. We've shared that one of our strategies is to build deeper relationships with our largest merchants as we renegotiate deals to reflect the value we provide. A key part of that is adding value-added services that improve the experience for our mutual customers. We've built a suite of world-class value-added services and continue to introduce new ones. In the fourth quarter, we launched FX as a service, which is automated currency conversion, and it's already live for Meta. We also actively scaled the use of network tokens for automated billing capabilities, which is live with merchants, including Instacart, Mint Mobile, and Poshmark. The expansion of our value-added services is a key driver of the transaction margin dollar growth we are delivering. Next, let's talk about our initiative to expand beyond e-commerce to become truly omnichannel. We launched PayPal Everywhere in September, which is driving significant increases in debit card adoption and opening new categories of spend. We added more than 1.5 million first-time PayPal debit card users in the fourth quarter, and debit card TPV was up nearly 100% in Q4. Our most active reward categories are gas, groceries, and restaurants. These new capabilities are driving deeper relationships with our users and more PayPal volume overall, offline and online. The average debit card actives generate 5 times the transaction activity and 2 times the average revenue per account compared to users who only use branded checkout. This is leading to habituation. Power users, which are PayPal consumer accounts transacting more than 100 times per year, grew more than 9% year over year in the fourth quarter. So we are seeing strong momentum today with our omnichannel push, but we're just getting started. We plan to expand our PayPal Everywhere value proposition to several European markets this year, including launching NFC capabilities in Germany. Moving to our progress to grow Venmo, Our task is twofold. First, continue to improve the social P2P payment experience that made Venmo a verb, increasing engagement and bringing on more users. Second, drive adoption of our monetized products, including the Venmo debit card and Pay with Venmo. In the fourth quarter, we continued improving the Venmo experience by giving our users more of the capabilities they've been asking for, like scheduled sends and improved search. With these steady improvements to the experience, we see engagement increasing. Our engaged Venmo user base grew 4% in the quarter, reaching more than 64 million monthly active accounts. On monetization, we increased the average revenue per active Venmo account in 2024, and we plan to build on that growth in 25. Monetized Venmo monthly active accounts beyond P2P and instant transfers grew more than 20% in the fourth quarter, driven by the adoption of Venmo debit card and Pay with Venmo. Venmo debit card monthly actives grew more than 30%, and Pay with Venmo monthly actives grew more than 20%. We continue to expand Venmo's acceptance with major brands like Instacart and MoonPay, adding Venmo in the fourth quarter. And as we recently announced, JetBlue became the first airline to accept Venmo for flight bookings. So while we are still early in monetizing Venmo, we have a proven playbook that is resonating with customers. This gives us confidence as we move to 2025 and beyond. Finally, I'd like to cover our efforts to accelerate growth for SMBs. We are moving from a disparate set of payment products to building an end-to-end suite of solutions that solves more small business needs. PayPal Complete Payments was the first step towards an integrated suite of solutions, and we continue to make progress driving adoption, with 45% of SMB processing and checkout volume now on this platform. Merchants on PPCP benefit from our upgraded branded checkout experiences. Key to our success in growing with small businesses on our platform is our expanding set of connected and value-added services, which move us beyond a payment provider to a growth partner and help us retain customers throughout their business lifecycle. Take, for example, our merchant financing solutions. Entrepreneurs come to us for payment services as they start their business. As their business grows, they need access to capital to buy inventory, invest in marketing, and hire. PayPal Working Capital is a financing solution purpose-built for early-stage companies. As the business matures, PayPal Business Loan offers more traditional merchant financing to match the increasing complexity and multi-channel nature of larger businesses. Our business financing solutions increase loyalty and engagement, driving the PayPal flywheel. Merchants typically increase their PayPal volume by 36% after adopting PayPal Working Capital and 16% after taking a PayPal Business Loan. Our merchant lending originations were $3 billion in 24, demonstrating our leadership and that there's plenty of room to grow to support our customers. This is just one example of the services we offer that help SMBs change the trajectory of their businesses. Expanding this ecosystem of value-added services is a focus in 2025 and beyond. To close out, I want to thank the PayPal team for their focus on delivering for customers every day. I am proud of how far we have come in the last year. It was an important transition year for PayPal. We created strong momentum that sets up well for 2025 and beyond. We are now executing a game plan that we have confidence in, and I'm excited to share more at our Investor Day later this month. With that, over to Jamie.
Thanks, Alex. Moving to slide 7, PayPal delivered another solid quarter of results to end the year. While there's still more work to be done, the team is making progress, building on the firm foundation that we have established. As we enter the second year of the company's transformation, our teams are energized and moving quickly. We remain focused on better serving our customers as we seek to drive durable, profitable growth. Looking at the high-level financial results in the fourth quarter, revenue grew 4% on both a spot and currency-neutral basis. For the full year, revenue grew 7% on both a spot and currency neutral basis. Transaction margin dollars grew 7% in the fourth quarter, or 6% excluding the benefit of interest on customer balances. Outperformance compared to our guidance was driven by higher contribution from branded checkout and Venmo, credit performance, and interest earned on customer balances. For the full year, transaction margin dollars grew 7%, or 5% excluding the benefit of interest on customer balances. Non-GAAP earnings per share were $1.19 in the quarter, up 5%. We ended the full year with $4.65 of non-GAAP earnings per share, up 21%. These full-year results benefited from a return to transaction margin dollar growth fueled by our transformation efforts, expense discipline, the higher interest rate environment, and a strong capital return program. Turning to slide 8, our operating metrics reflect another quarter of steady progress. Total active accounts increased by nearly 3 million from the third quarter and nearly 9 million from last year to 434 million. Monthly active accounts also continued to show steady progress, up 2% year over year to 229 million, with contributions from PayPal consumer accounts and Venmo. Transactions per active account, excluding PSP processing, grew 4%. Moving to slide 9, total payment volume grew 7% on a spot and currency neutral basis to $438 billion. For the full year, TPV grew to nearly $1.7 trillion, up 10% on a spot and currency neutral basis. Looking at the TPV breakdown by product, we see strength starting to build in some key areas. PayPal P2P accelerated for the 6th consecutive quarter to 6% growth. Venmo also accelerated by 2 points to 10% growth. Steady incremental product improvements combined with reinvigorated marketing campaigns are starting to make an impact. Global branded checkout volumes increased 6% on a currency neutral basis in the fourth quarter. This was about a 50 basis point acceleration from the prior quarter. Underlying this growth, we were encouraged to see U.S. branded checkout volume improve in the fourth quarter. Part of this increase can be attributed to a healthy spending environment and specific vertical exposure. In the U.S., we are focused on scaling our modern, best-in-class experiences. From a merchant perspective, we continue to see the greatest strength across large enterprises, platforms, and marketplaces. Winning checkout remains our most critical priority. Our goal is to drive more consumer engagement and a higher PayPal selection rate, which should accelerate TPV over time. Turning to PSP, as discussed throughout the past year, we moved rapidly within our Braintree business to prioritize healthy, profitable growth and intentionally let go of unprofitable volume. In line with this strategy, PSP processing volume grew 2% in the fourth quarter compared to 11% in the third quarter. Our conversations with merchants have become more holistic, moving beyond price and share of card processing to a deeper appreciation of our customers' needs and how we can add value through our full suite of solutions. We expect a handful of large Braintree merchant renegotiations to result in a headwind to revenue growth of about 5 points in 2025. Shifting away from this volume pressures gross revenue, but is accretive to transaction margin dollars and will result in more than 1 point benefit this year. We expect this benefit to build over time as we drive more value-added services. Over the next few quarters, we will continue to work through renegotiations, at which point we should reach a new baseline to drive faster volume and revenue growth. Moving to more financial detail on slide 10, transaction revenue grew 4% on a spot basis to $7.6 billion, driven primarily by branded checkout and Venmo. Other value-added services revenue in the quarter grew 5% to $778 million. This acceleration was driven largely by a return to growth in credit revenue. We continue to see solid performance across our credit portfolio. As Alex shared, we have begun to modestly grow merchant originations and expect credit to be a positive revenue and profit driver in 2025. Transaction take rate declined by 4 basis points to 1.73%, driven largely by mix. Venmo monetization was a slight benefit, offset by merchant mix within branded checkout and Braintree, faster growth in payouts, and foreign exchange. Turning to transaction margin dollars, the largest contributors were branded checkout, Venmo, interest on customer balances, a return to growth in credit, and Braintree. Transaction margin percent increased by more than 100 basis points for the second consecutive quarter, reflecting our focus on price to value and profitable growth. As planned, we increased our level of strategic investment in the quarter, growing non-transaction operating expense by 10%. This growth included marketing spend deferred from the first half of the year and efforts to support the rollout of new products and initiatives. Non-GAAP operating income grew 2% in the quarter to $1.5 billion. Non-GAAP operating margin declined 34 basis points to 18%. PayPal generated $2.2 billion of free cash flow in the quarter, bringing full-year free cash flow to $6.8 billion. This is meaningfully ahead of the $5 billion we planned for at the start of the year and includes some benefit from lower cash taxes, which we expect to be a headwind in 2025. In the quarter, we completed $1.2 billion in share repurchases, bringing full-year share repurchases to $6 billion. Finally, we ended the quarter with $15.4 billion in cash, cash equivalents, and investments, and $11.1 billion in debt. Moving to guidance on slide 11 for the first quarter and full year 2025. For the first quarter, we expect flat to low single-digit revenue growth on a currency-neutral basis, which is heavily impacted by the Braintree renegotiation efforts I discussed earlier. This also includes about a 1-point headwind from lapping last year's leap day. We expect transaction margin dollars to be between $3.6 and $3.65 billion, which represents 5% growth at the midpoint. We are planning for low single-digit non-transaction OpEx growth in the quarter. And we expect to deliver non-GAAP EPS in the range of $1.15 to $1.17, or approximately 7% growth at the midpoint. Moving to the full year, we plan to continue guiding revenue one quarter at a time. We believe this approach has served the company well during our transformation, enabling healthy, long-term decision-making that prioritizes driving faster transaction margin dollar growth. Over time, we are focused on accelerating both revenue and profitability. For the full year, we expect transaction margin dollars of approximately $15.2 to $15.4 billion, representing approximately 4.5% growth at the midpoint. In 2024, we had a 2-point benefit from interest on customer balances. For 2025, our guidance includes about a $150 million or about a 1-point headwind due to interest rate cuts. Excluding interest on customer balances, we expect transaction margin dollars to grow by at least 5% compared to 4.6% growth in 2024. In the first quarter, we expect minimal benefit from growth of interest on customer balances and then a headwind for the remainder of the year. One other factor to keep in mind is that in 2024, we saw a 1-point benefit from transaction loss improvements. We are planning for some normalization in transaction loss during 2025 as we roll out new products. Our focus in 2025 is to strike the right balance between investment and productivity, seeking to fund long-term investments largely through savings generated from better tech and automation deployment. We expect full-year non-transaction operating expenses to increase in the low single-digit range. There will likely be some unevenness quarter to quarter due to the timing of initiatives, marketing spend, and comparisons to the prior year. As a result, we expect second quarter OpEx growth to be higher than in other periods. We expect to deliver full-year non-GAAP EPS in the range of $4.95 to $5.10, representing about 8% growth at the midpoint. This includes negative impact from lower interest rates and just over a 2-point increase in our expected non-GAAP effective tax rate. Our guidance also includes approximately $6 billion in share buyback, and we expect full year free cash flow of approximately $6 to $7 billion. I'd like to wrap up by thanking the PayPal team for their continued focus and dedication. The progress we made in 2024 gives us a strong foundation to build on as we move into the second year of PayPal's transformation. One of our primary focuses this year will be driving adoption of recent innovation and scaling better customer experiences. It will take time for some of our efforts to build and drive financial impact, but we are confident in our roadmap and in our execution plans. And we're excited to share more with you at our Investor Day on February 25th. With that, back to you, Alex.
Thanks, Jamie. To summarize, in 2024, we executed the transition plan we laid out. We have positioned PayPal to compete and win and delivered strong results along the way. I'm very proud of our team and the impact they made during a year of intense change. The momentum we have created sets us up well for 2025, which is about scaling adoption. It is still early in our transformation, but our objective is clear. We are evolving PayPal from a payments company to a commerce platform that helps merchants win every sale and helps consumers shop smarter. Steve, let's go to Q&A.
Before we open the line, I'd ask everyone in the queue to consider your fellow analysts and ask just one question so we can get to as many people as possible. Sarah, please open the line.
Thank you. At this time, I would like to remind everyone, in order to ask a question, please press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Andrew Schmidt with Citi. Your line is open.
Hi, Alex and Jamie. Good to see the next stage of the transformation here. I wanted to dig in on branded volume growth. Maybe you could just unpack the fourth quarter performance, particularly in the U.S. How did it sort of trend relative to your expectation in terms of share of checkout? And then as we think about 2025, what are the right expectations to set for branded volume growth? And I know you mentioned a few things that are drivers there, new checkout integrations, reinvigorating the consumer side. Maybe just remind us, what are the biggest unlocks in the time frame to see those come into play? Thanks so much.
Yeah, thank you, Andrew. Let me kick off and then hand it over to Jamie. So first, let me just remind us of the context of what we walked into at 24 on branded checkout. I talked about it throughout the course of the year as our number one priority, and most of it was focused on how do we improve the customer experience. We felt good about the desktop experience, but clearly gaps in mobile. And that was innovation that the team really executed on throughout 24, tested a number of different pay sheets, a number of different vaulted experiences. And then by the time we got to 24, felt really good about the innovation we were rolling out. And as we started to roll out, just as a reminder, our one-time checkout improvements is 400 basis points on conversion. Our vaulted improvement is 100 basis points on conversion. And the biggest impact is really on our mobile and our small business base. So really excited about the innovation that's now rolling out. As we talked about in Q3, we had just started the rollout. We'd ramp that to about 5%. Throughout Q4, we continued to execute on our rollout and got that up to 25% by the end of the year. So as we exit 24, I'm feeling really good about the quality of the innovation, our ability to roll it out and impact customers. And as we look to 25, we now have, I believe, the best-in-class experience on desktop, on mobile, and starting to see knock-on effects of things like our Buy Now, Pay Later attach, which is up 20% with this new pay sheet. So from an innovation perspective and a customer impact perspective, feeling really good as we go into 25.
Yeah, and Andrew, good morning. Just to add on there with respect to the U.S., we did see sequential improvement in branded checkout in the U.S. in the fourth quarter, and that was about 3 points of growth. quarter over quarter, really due to market dynamics, but also, specific key vertical exposure around travel, crypto, gaming, et cetera. Alex mentioned we're still early in the ramp of our modern checkout experience, and that is certainly something that as we get into 25, we are very, very focused on. Our biggest priorities are really around innovation, driving those improvements in checkout experience. You mentioned also giving consumers more reasons to choose. So some of the things we've done throughout the year around, really improving the app experience, adding rewards, adding different elements to how people can find contacts and things like that. All of that is around engaging the consumer in a different way. And as we talk about internally, really getting the flywheel continuing to move between our consumers and our merchant experience. So from a 2025 guide perspective, we still expect branded checkout TPV to grow about mid-single digits and to have consistent growth from last year into this year with some acceleration of our initiatives on top of that.
The next question comes from Ramsey El-Assal with Barclays. Your line is open.
Hi, thank you for taking my question this morning. As expected, unbranded volumes decelerated again as you pursue the price to value strategy. Can you give us your updated thoughts on your sort of confidence level, timing, and toolkit to re-accelerate unbranded volume growth at the higher baseline profitability levels as we move forward here?
Yeah, let me just touch on, thanks for the question, Ramsey. And let me touch on just how these conversations are evolving. So first, again, this has been our strategy throughout the year. I'm encouraged to see just another quarter of unbranded Braintree contribution to TM dollar growth. The conversations are continuing to be strategic in nature, which is exciting for us. We're having not just processing conversations, but now they're sort of evolving into two steps. One is the value-added services that we're bringing to market. I mentioned some of these: FX as a service, risk as a service, chargeback automation, orchestration. All of these are things that we're now able to price to value and monetize as part of a best-in-class unbranded offering. In addition, though, we're really starting to differentiate ourselves in these conversations by being able to bring customers to the conversation. And so again, as I sit down with CEOs of some of our largest customers and really talk about what are their greatest needs, it goes well beyond just processing. It really goes to how do we bring more customers to bear. And this is really the first time that we're leveraging the two-sided network that PayPal has and being able to say, hey, we have hundreds of millions of consumers around the world. We now have an ads platform. We have reward platforms. We have the ability to enable our unbranded processing customers to create rewards and offers inside of our PayPal app to be able to drive additional growth for them. And so these become really fun conversations, to be honest, because we're now having holistic, not just processing, but end-to-end. How do we leverage their marketing dollars? How do we leverage their ability to acquire customers and our two-sided network?
Yeah, and with respect to forward trends on this, we do expect similar dynamics the next few quarters. Some volatility. I mean, this is not something that just happens in a perfect line, and we still do have some large agreements over the next couple of years that we will work our way through. But the revenue growth should build as we lap some of these larger agreements sloughing off, over time. For 2025, we expect the renegotiations to be about a 5-point revenue growth headwind. But the other important point here is that it's a 1-point accretive on the TM dollars growth in 2025. So I think an important dynamic there that, as you mentioned, we're very intentionally driving.
The next question comes from Jason Kupferberg with Bank of America. Your line is open.
Good morning, guys. I just wanted to come back to the branded TPV topic. I think you mentioned U.S. accelerated 3 points in the quarter. If I caught that right, I guess that would imply international slowed. So perhaps you can quantify that and then maybe give us a sense of how that mid-single digit global branded volume outlook for 25 splits between U.S. and non-U.S. and just a little bit of color on how the transaction margin profile differs between U.S. and international branded? Thanks, guys.
Good morning, Jason. You know, with respect to international, we are still in a very strong market position there, and we continue to take share internationally. We had less than a full point of international, pullbacks, just some softness in Europe is what I would say. And when you look at the split international to US, both in the TPV line and in the TM line, it's really 50-50. And from a margin perspective, it's slightly healthier outside the US, but it's very much in line.
The next question comes from Tien-Tsin Huang with JP Morgan. Your line is open.
Hey, good morning. Thanks for the update. Just on Grow Venmo, can you just, I know you'll talk a lot about it on February 25th, but is it more about user growth, new products, or ARPU from existing products expanding? Just curious what the algorithm is there. If you don't mind a quick clarification, the step up in CapEx in 2025, is that more of a one-time issue? Is that a sustainable level to consider? Thanks.
Hey, Tien-Tsin. Let me hit Venmo and then hand it over to Jamie. So you're on Venmo, and again, it'll be exciting to see you all at Investor Day, and we'll certainly dive deep on Venmo. But really, it is both customer growth as well as monetization growth. Again, we are excited. Venmo is the number one P2P platform in the U.S. We saw MAAs continue to grow to 63 million by the end of this year. We're seeing TPV continue to grow up 10%, hitting double digits, really for the first time in I think 7-8 quarters, up to 76 billion. So really exciting to see the continuation of growth and active users. In terms of our focus on monetization, again, we've been consistent. This is about proven levers of debit card MAA growth, which was up 32%, and Pay with Venmo MAA growth, which was up 22%. The reason this is important is we've seen that debit card MAA delivers average revenue per account 4x when they adopt our debit card, and Pay with Venmo average revenue per account is up 3x. And just as a reminder, we are in single-digit penetration across both of those products across the base. And so as we continue to grow customers, we're growing active customers, and we're starting to grow penetration of monetizable elements. So this is exciting for us. We also will just continue to focus on innovation. I think we're just scratching the surface of a very engaged, highly valuable demographic. We've rolled out new innovations like scheduled send and gifting and groups and direct deposits to bring more money into the ecosystem. But the team has a really, really exciting road for 25 as we start to really think about what are the other needs once this money is in the ecosystem of Venmo. What are the other needs that our customers have to be able to enable them to be able to spend in an omni-channel way and obviously move money across each other. So exciting about what Venmo will have, and we've built a very good baseline of monetization throughout 24, which sets us up well for 25.
Good. And then with respect to CapEx, we're seeing over the next 2 years an increase in the program to about $200 to $300 million. And it relates to tech infra build out and data center build out in connection with both platform consolidation and a few other things. But after the 2 years, it should come down.
The next question comes from Darrin Peller with Wolfe Research. Your line is open.
Yeah, thanks, guys. Jamie, I think you said you'd expect stable branded growth through 25 based on what you're, what's built into your outlook. You guys have initiatives now where 25% of your checkout experience is on the more modern checkout, which I know is kind of ramped through the end of last year. We're there now, and so it should impact, I think. The debit card is more further out. Marketing has been more substantial. I guess I'm just curious when those initiatives you think would have a more material impact, or are they embedded in your outlook that they could have an impact on branded acceleration as the year progresses? Or are you just building in uncertainty around things like international, maybe Germany or any other softness? And then just one quick follow-on would be the exit rate of transaction margin growth. Ex-flow was, I think, 6% in the context of this 6% branded. So I'm just curious, when you think of your forecast, is there anything about this fourth quarter growth rate that was unsustainable, other than maybe leap year? Otherwise, you're 5%. And I think you guided 5% plus, so it may capture that. Thanks, guys.
Yeah, so first let's talk about the branded checkout growth in 2025. You were specifically asking about initiatives, and as Alex mentioned, we've got 25% of our US TPV flowing through the most modern checkout experiences at this point. That is something that we expect to scale as we get into 25, and in addition, we're going global with that as well. So to your point, we do expect some impact from that to start to flow through, and we have embedded some of that in our guide, and we expect it to build over time. Having said that, we also think we've prudently planned here. And I wouldn't say we've explicitly put an overlay for European, softness in there. Having said that, we've left ourselves room to navigate, different things, because as we roll this out, the impact of how this will flow through, may be uneven as we see it. And then, Darren, remind me of your second question. It was on TM, but I didn't pick up the exact question you were asking.
Growth rate, you're at 6% already without any acceleration in the underlying KPI, despite all the initiatives you've done. And you're guiding 5% plus, I guess 5% plus, right, from a non-float impacted. So just making sure there's nothing unsustainable in Q4's exit rate that should, inform you on 25's growth.
Yeah, when you look at 25 from a TM perspective, there's probably two things to think about that are headwinds to 2025 TM. The first is we expect transaction loss to normalize as we get into the year. We had a full point benefit of that in 24 or full basis point benefit. And when we get into 25, we expect about a half a basis point headwind. And really, we are growing products that just carry with it a higher transaction loss rate. And then, you mentioned the 6%. I would talk a little bit, even though around interest rates. When you look at total all-in TM, we're expecting about $150 million of interest rate headwind on all-in TM there too. But when you look at the underlying profile of TM, which really revolved around branded checkout, Braintree, Venmo, credit, I mean, all of those things are things that we believe are durable. It's clearly diverse, and things that we fully expect to continue as we get into 25 and beyond.
And Darren, I want to pile on to Jamie's comments as well, because I think it's really important to set our branded checkout strategy in context. First, as Jamie said, and I think we've been consistent throughout the year, we're excited about the innovations. I think we've been pretty prudent in the way that we have looked at a forward guide. We want to see the results before we tell you they're coming. But if I just step back and think about the strategy, think about what we did in 24. We really worked on innovation and what I would call just fixing the basics of branded checkout. As I described earlier, an improved product now in the hands of customers on both desktop and mobile. And we're now starting to see that scale, as you mentioned, up to 25%, and we'll continue to scale that throughout the quarter and the rest of 25. We've expanded to checkout, to guest checkout, which we weren't playing in before. And now we're starting to bring in new users through our Fastlane product, which again needs to continue to scale and will scale over the next few years. But we now have innovation in market that is best in class to go after the guest checkout experience. We expanded to offline. So now we're playing in an omni-channel world where it's not just branded, but we're seeing offline commerce that we didn't see before, and it's driving habituation. Our debit card users are transacting twice as much as just a branded user and driving 20% higher average revenue per active. So we're just starting to put together a holistic strategy here that's beyond just a single button experience, but really starting to engage our growing customer base, our growing monthly active customer base in a holistic way where we really can be their commerce partner going forward.
The next question comes from Timothy Chiodo with UBS. Your line is open.
Great. Thank you for taking the question. So in the past, and when we talked about the mix within the branded checkout, we typically talked about it being very skewed to discretionary and to goods. And in prior periods of strong discretionary growth, during 2020, 2021. The branded checkout button grew in line, if not faster, depending on the metric or the industry data that you're looking at. The growth was better than industry. Could you maybe talk a little bit about how that mix might have evolved, if at all? And if we were to expect a better period of discretionary spend, should we see another period of the branded checkout button growing in line, if not faster, than the industry?
Good morning, Tim. So when you look at the composition of our verticals now, I would say that one of the things we've done a really nice job of in the last couple of years is really expanding to services. And, when you look at some of the dynamics that you might have seen 3 or 4 years ago, when you shift to now, we're just more balanced across different verticals. And I mentioned some of the growth in a few of the areas, but services in particular is one that has been a larger space. So I expect the dynamic to be more muted with respect to that discretionary side of it and the good side of it.
The next question comes from Sanjay Sakhrani with KBW. Your line is open.
Thank you. Good morning. Just a follow-up question on the U.S. branded volume. I think, Alex, you mentioned that it exited at the quarter at the high point. I mean, is there any color on sort of what that growth rate was and how it trended into this new year, quarter to date?
Yeah, so really the way I think about branded US is that, we have been moving along and we're obviously very focused on continuing to shift, continuing to impact our US market position. And Alex talked about a lot of the innovation, specifically around mobile and around a couple of other areas that is really focused on driving shifting there. We saw some lapping in the first part of the year, but as we hit third quarter and into fourth quarter in particular, that was pure growth off a base, and that 3 points was reflective of that.
The next question comes from Colin Sebastian with Baird. Your line is open.
Thanks and good morning. Maybe turning to the non-transaction expenses for the year, I was just hoping you could maybe expand on first, I guess, the ability to use AI for more operating efficiency, and are those initiatives that are requiring some incremental investment near term, or are you already seeing sort of a positive ROI from that? And relatedly, with the focus on scaling innovations and educating consumers, I guess, what does that mean specifically in terms of the investments in customer acquisition and rewards that might be impacting operating margins through the year? Thank you.
Yeah, thank you, Colin. Let me start with AI and maybe hand it over to Jamie. AI is opening up a huge opportunity for us. First, at our scale, we saw 26 billion transactions on our platform last year. We have a massive data set that we are actively working and investing in to be able to drive our effectiveness and efficiency. Let me break it into a couple of different pieces. First, on the customer-facing side, we're leveraging AI to really become more efficient in our support cases and how we interact with our customers. We see tens of millions of support cases every year, and we've rolled out our PayPal Assistant, which is now really cutting down phone calls and active events that we have. We also are leveraging AI to personalize the commerce journey, and so working with our merchants to be able to understand and create this really magical experience for consumers when they show up at a checkout. It's not just a static button anymore. This really can become a dynamic, personalized button that starts to understand the profile of the consumer, the journey that they've been on, perhaps across merchants, and be able to enable a reward or a cashback offer in the moment, or even a buy now, pay later offer in a dynamic experience. And so this is all AI enabled and all things that will generate both efficiency for us from the consumer standpoint, but also drive more branded checkout and more sales for our merchants. In addition, we also are looking at our back office and ensuring that not just on the engineering and employee productivity side, but also in things like our risk decisions. We see billions and billions of risk decisions that often, to be honest, were very manual in the past. We're now leveraging AI to be able to understand globally, what are the nature of these risk decisions and how do we automate these across both risk models as well as even just ensuring that customers get the right response at the right time in an automated fashion.
Yeah, and then with respect to scaling consumer and non-transaction OpEx, we increased our marketing spend in 2024 by about $250 million, and we were very focused around really reinvigorating the brand and then really reinforcing the consumer value prop as we did it. And as we get into 2025, we will be increasing marketing slightly. Our total OpEx guide is up low single digits. I would say marketing is up low single digits plus in terms of how we look at it, heavily weighted towards the second quarter as we really look at the profile throughout the year. But it's been very targeted. And, we've seen the results of that starting to come through with consumer MAAs up sequentially. We saw debit card MAAs up sequentially. We're seeing P2P improvements. So there's been a nice, kind of flow through of what we've seen. We've got some CAC or customer acquisition costs budgeted for this year, but we really haven't started deploying that yet. We've been testing that, but the full suite will be things that we'll be looking to deploy as we get into 2025.
The next question comes from Harshita Rawat with Bernstein. Your line is open.
Hi, good morning. I want to follow up on Fastlane. You talked about the new merchant wins. Now that the holiday season is over and the merchants are more open to integrating new solutions, how are those conversations going with large merchants, especially because there's also some competitive dynamics there? And then, Alex, you also talked about 75% of Fastlane consumers kind of being new or dormant PayPal users. Can you just remind us about how you're converting those into PayPal users? Thank you.
Yeah, thanks, Harshita. So you're exactly right. So guest checkout, just as a reminder for Fastlane, this is really 6 months in the market, so it's still brand new. There are other guest checkout experiences that have been in the market for some for many years, one almost up to a decade. And so we're the new entrant, but we're delivering the best converting experience for our merchants, and that's what gets us really excited. Is as we start to scale our Fastlane experience, we are still continuing to deliver double-digit lift in conversion for our merchants. And so our go-to-market focus has been really on those enterprise merchants, on the largest ones. I mentioned a few on the call: NBCUniversal, Roku, StockX. And this has been obviously set up conversations throughout the holiday season, as many of them weren't ready to actually do the integration. But now, as we get into 25, it's full steam ahead. Now, just as a reminder, as we have these conversations, they are very excited about the conversion uplift. Guest checkout is also not something that they've spent a lot of time playing around with. So it's not like these merchants have Scrum teams sitting there ready to play around with guest checkout. So they're working on their roadmaps. So the conversations have been great. It's now about getting implementation done. And I do think this will take a number of quarters for us to really scale this out across the merchant base. But the conversations are exciting. Merchants are on board, and I think we'll continue to see this scale. To your question on what we're seeing from a customer perspective, again, 25% of Fastlane users that are coming in are new to PayPal. 50% were dormant in the last 12 months. And again, these are customers that are opting into Fastlane at a 45% clip. So we're continuing to see customers choosing to, once they go into that guest checkout experience, actually opt in to the Fastlane experience. To us, this is just scratching the surface of being able to now reinvigorate them. So we started to really ramp up our marketing efforts. It's still early, and it's through both offline channels, things like email, testing notifications, as well as online through the app, to find incentives and reasons for these consumers to be able to re-engage in the PayPal experience. The good news is it's sort of a second bite at the apple, right? They've gone past the branded experience. They've gone through a guest checkout experience. We've accelerated it for them and for merchants. We've created that conversion, and now we can go and remind those consumers what a great experience, a cashback offer, a package tracking offer, a full end-to-end experience they could have gotten through a branded checkout. And we're going to continue to lean into that to reignite those users into being more consistent, active users on PayPal. The last thing just that I'd say as context is, our PayPal users that are online don't use PayPal for every single one of their purchases. This is why the omni-channel habituation and just continuing to drive up not just our MAAs, but those power users that I talked about that are really using us for all of their purchases is so important to us. Because we still have users that love PayPal, have an active app, use us, but still use us for just a fraction. And so our ability, even through the Fastlane experience, to gather those users up and remind them of the benefits of actually going through the branded experience of PayPal is so important and will ultimately drive to our branded checkout growth.
Okay, Sarah, we have time for one more question.
Thank you. Our last question comes from the line of Trevor Williams with Jefferies. Your line is open.
Great. Thanks a lot. I wanted to go back to Venmo. Jamie, it sounded like next to branded, it was one of the biggest contributors to TM dollar growth in Q4. You guys have given some good stats on attach rate and user growth across the different buckets. But it'd be helpful if we could get an updated transaction margin dollar number for Venmo, and then anything more just on the current mix of revenue across the different buckets, debit card, pay with Venmo, instant transfer, and then just how you're thinking about Venmo's contribution to transaction margin dollar growth in 25. Thanks.
Yeah, so Venmo has been a growing contributor to transaction margin dollar growth. Certainly in 24, it was behind interest, branded checkout, Braintree, et cetera. As we get into 2025, it continues to grow in terms of its impact on TM, which is really great to see. When you look at, our Venmo TPV was up 10% in the fourth quarter. Our debit card TPV was up 40%. Pay with Venmo was up 50%. P2P was up 8%. So, we're really excited about not only the core P2P continued strength, but also just the beginnings of the investments we're making in debit and pay with Venmo, which, when we really dig into this, which is really our new Venmo leaders, target in 2025, we're excited about the growth we can drive. When we get to Investor Day at the end of February, we'll unpack this with a lot more detail, and we're looking forward to talking to you all there.
Alex, any final thoughts?
No, just a huge thank you to all of you, and thanks, Steve. Look forward to seeing many of you later this month at our Investor Day on February 25th, where we will share our vision for the future and dive into our strategies for medium and long-term growth and what it's going to take to get us there. So take care, everyone.
Neil, how you doing?
Well, hello. Hello.
How are
Doing
Thanks
good?
for that.
My pleasure. My appointments took a bit longer than expected, but so I missed the start. I don't know. Braintree is decelerating, but I think that was expected. But we'll touch on all of that right now. But all in all, I don't know. Good quarter, solid quarter. I'd say not good.
Yeah.
I said solid.
Solid is the right word.
Yeah.
I'd give them actually a B- now. I'm going to bump my grade down slightly. Earnings call was not as good as I was thinking for the call itself. Numbers are solid. I think that part of the reason why, I'll just say it. Like we're wanting to hear more about the advertising platform, and if they wanted to say that for Investor Day, fine. But it would have been great if they were like, "Hey, advertising platform, we're really excited about it, and we'll share a lot more on Investor Day at the end of the month." Okay, fine, fair enough. Or a single analyst is like, I don't know if they know that the advertising platform exists. Like, what in the world? And it's such high margin. The guy that's in charge of it, I mean, this will be the third business that he's basically built from scratch, the advertising business. Amazon, where he was not the lead, but he was a key instrumental figure in that. And Uber, which has a phenomenal advertising business. PayPal's better positioned than that. So, yeah,
I'm yeah, I mean, I wasn't impressed with the call either. It wasn't as bad as some people were making it out to be in the chat. I know that people you can listen to Elon Musk or an Alex Karp, and then you listen to this and you go, why aren't they shouting from the rooftops? But this is more of a traditional earnings call. They're laying their business out. That being said, though, I think that this is one of these companies. What I'm starting to come around on is that it just doesn't fit very well with the rest of my portfolio. And what I mean by that is that it's not that this is a poor investment or anything along these lines. I actually think that this will be a very stable company. It's a little too cheap to probably continue to drive lower or something like this. With the amount of stock-based or share-based buybacks, they are, I think, going to do very, very well long term. But if you look at my portfolio, it is growth, 4 to 5% transaction margin dollar growth year over year. Just doesn't fit in with that. And they said, well, it's not all baked into the guide, but what does that get us? 6 to 7%? I don't know.
Yeah, I mean, you can do what you want with your portfolio.
Yeah.
Being at since we're in the same month where Investor Day launches, like you may want to wait until Investor Day, see what happens. Plus, I mean, like you said, unless you see like an opportunity, you just have to seize, and maybe you do with NVIDIA. I don't think that the stock has much more to go down, barring a macro collapse. So, especially with what they're buying back.
Yeah, that's the thing. I don't think that this drops. I think this is it, which is probably a good place for some to enter. But like you said, you literally named the name that I'm thinking of, which is like, if I can capture NVIDIA sub 120, I mean, I might want even more.
Yeah. I'll buy, probably slowly here, because we just didn't get much of a read on advertising. Advertising is really what I wanted. It was also curious what they said with Fastlane. They mentioned, I think it's now 2,000 accounts that they have, which it's largely those large merchants that they're trying to capture, I think. So probably a lot of them are that. But it was the way that they worded it, and I'll have to go back and look at the transcript. It sounded like the partnerships that they have, such as through Adyen, that they've not really even focused or done anything with Fastlane yet. And that may have been due just to holiday season. They said, hey, we're focusing on this. After holiday season, we're going to, start pushing Fastlane products. But I don't know. That was kind of disappointing. And just, no advertising business mentioned at all. Like, that is such high margin and such potential. Weird.
Megaleg is actually in the chat right now. He's the guy that did the honey scandal video that we covered pretty extensively here, and which was great. They're not going to cover it. I don't think you're going to hear about it on Investor Day or really any call coming up.
Because there's lawsuits, they can't really mention honey, I don't think, or they'll be very cautious. Their lawyers will be telling them, don't mention it.
Just so I don't end up in your next video, the comments about Will Ferrell making $200 million, that's not a real comment. He was just on a lot of their commercials, and they said that they spent more in sales and marketing. So it was just a little joke. Don't make that a part of your part 2 or part 3. All right. Neil?
Yeah, I mean, $15 billion in buyback. What's that? Closing in on 20% of 17.
Yeah, that's crazy.
And I think that's 15 billion added to what was, exactly. So it's close to 20 billion total authorized, which is
not bad.
Yeah. I mean, it's tough to see like any meaningful downside with PayPal. I think at worst, and I think it's always been this way, at worst, it's an opportunity cost that grows, like 30 or 40% each year, as far as, what the stock does. I think there's a lot more upside to that with the first look products, but they're not building that into guidance. They didn't comment too much on it. And the little bit that we did get from Venmo was good. Debit card use was good. But as far as like Fastlane, not impressed with that, frankly. And no mention of advertising yet. So that one's just a question mark. So we'll hear a lot more, I know, at the end of the month. But yeah, stock
What
price down 9%.
what did they say at the start about Braintree? Did they address it? Other than what they mentioned maybe a quarter or two ago?
Yes, I need to go back to into the transcript when once that is released, but that was guided forward plan, basically. You know, they're slowing the Braintree revenue in exchange for margins. I mentioned that a couple of times in a couple of places, and that may be the other thing too that the market's not liking. So number of payment transactions was reduced by 3% year over year. Usually that goes up. And so, I think a lot of that is Braintree, that they're just trying to offset that just so that they have higher margins. But yeah, reality is that's not, really what you want to see.
I think part of the a CEO's job is to, do well by the investors and not pump the stock, but I mean, talk about the opportunities that lie ahead of you. And the advertising platform is definitely one of those that I think that was a missed opportunity to excite people about the future. And potentially you could just be putting all your chips on February 25th. I think that's a mistake.
Yes.
You have 4 times a year where investors are diligently listening. Potentially you might add on an investor day, but even then it's not a guarantee that everyone will be there. Talk about your advertising platform. Talk about PayPal USD. Talk about all the future innovations, which is actually what is innovative. Charging more for Braintree is not an innovation. That's charging more. And potentially you can get that from your customers, but stock actually just hit a new, not low in pre-market, but we hit 81.05, which is trying to pull back on right now, but down just 9% right now.
Yeah, and now down 5% year to date. So not really what you want to see. I don't. Stock price can do anything. Valuation is attractive. Guidance is not, especially without, they mention it, that they're not building into the guidance of First Look products, but at some point they need to, unless they don't think that they're going to scale, then tell us.
Yeah, that's the thing. Like we said that a couple of quarters ago, it's fine. You're coming in new products and all of that. Maybe guide lower so you can beat it, but at one point you will have to guide accordingly. Not the best of guides and comments. I also see that they generated $2.1 billion in free cash flow. Would have liked them to buy back $2 billion of shares that quarter. Maybe they'll do that now. But yeah, all in all, I mean, there are some positive things, of course. I mean, more than some. It's nice to see transaction take rate back up a little bit.
The actual transaction margin looks great.
Yeah.
47% climbing back up.
That and 60% growth in free cash flow.
Yeah, if they can get the transaction margin back above 50%, like that kills so many bear cases. Because there's just this big case, and I actually still think that this case is true, that the take rate on payments, especially in a future payments world of like stable coins coming in, I think that the take rate on payments is going to fall. It's just a matter of if the margin that PayPal can take, even if it goes ahead and continues to lower, if they can be much higher than their competitors, then the actual total amount of transacted payments could skyrocket. It's sort of that same effect that people are talking about with DeepSeek and I forget what it's called, the Jevons of paradox or whatever.
Jevons, yeah.
The cost of actually sending the money goes down so much that the people have more opportunity to actually, send money. But
I mean, we have Investor Day at the end of the month, so I'm excited for that. I think that we'll get a lot more detail. If we don't, that's when I'll be concerned. If it resembles anywhere where their 2021 guidance was, where it was, this is what we've done in the past, this is where we're at now, and a little bit in the future, and it's all just TAM and no strategy. It's a different PayPal. They won't do that. But no, decent earnings, solid numbers. Earnings call, not quite as good as we'd like, but
Could have skipped the earnings call, to be honest.
honestly,
Wouldn't have changed much. wouldn't have changed much. No, but I understand why he wants to keep a lot of it for the investor day, because earnings calls are not really made to make huge announcements and all of that. But still, I mean, for them and for the analysts to not even talk about the ads business, not even talk about the stablecoin potential and how they expect that to grow, either the analysts are stupid or they only want to ask it after the earnings call, like behind closed door, only for their specific clients, which is quite strange. But there is definitely a strategy at PayPal. Profitable growth is definitely here. They're growing in a profitable way, which is fine. Trying to switch to a full commerce type of platform company, which I can see that happening as well. But again, please excite us a little bit, which, okay, maybe they'll shock us, or I'll say excite us. This is the next title. PayPal is expecting to excite us later in this February. But we'll see. I mean, year on year, the stock is still up 40%. Maybe now a bit less after today, but yeah, a better company today than when Schulman was just leaving.
Oh yeah, it's a significantly stronger company, but there's a long ways to go between where they're at now and actually shocking the world. Long ways.
Yeah, so someone was bringing up, I actually missed it. There was comments about 2030 being when they're going to shock the world or something.
Jesse was making a joke.
But I saw quite a few comments throughout the earnings call about something about 2030. I thought maybe they mentioned that, because I mean, that would be a crazy thing to say that, hey, we have great things coming in, from here to 2030.
I think they said 2030 at one point. I might be misremembering it, but in 2021, when they did their investor day, they guided out through 2025. So it makes sense that probably at this investor day, they're
going to
give rough guidance for the next 5 years, which is awesome. I love that. And it really shows what they believe. And they'll be conservative more so than Dan Schulman's guidance. Like they missed. I did a post and everybody's like, "Oh, you've turned bearish on PayPal." It's like, no, I'm bearish on Dan Schulman's guidance given in 2021 that they'll hit any of those numbers or even come close. Despite Alex's best attempts, free cash flow, they're doing good things there. But everything else is just so far off where Dan and his team had forecasted. And I don't think we're going to get that with Alex Chris. They tend to underpromise and overdeliver, maybe a little bit too much underpromising and a little bit too much caution. But I'd rather have that, if we had to pick between the two, versus what Dan Schulman's like, hey, we're going to ridiculous amounts. I think that they said in 2021 that they would hit $50 billion in revenue in 2025. So it just
little off,
just slightly off. Yeah.
Yeah. But I think that this is a potential good stock for value investors, the people that see this as a company that's being priced to zero growth and it's going to do more than that. Obviously, I think that there's some opportunity there. For myself, I don't know. It was not as fast of a turnaround as I wanted it to be. And then the 2025 guidance is just kind of, do I want to do 4 more quarters of this? No. So, I don't know. I don't know what I'm going to do. I'll let people know whenever I make my decision.
Yeah. Definitely do that. Do what's right for you guys in the comments too. You don't have to wait for Investor Day. I'm going to be buying slowly until then. And then I'll, depending on what Investor Day looks like, may ramp that up aggressively. Maybe the stock price goes up and I don't get quite as a good average. That's okay. But it's really important that we know where they're going as a company. And it's hard to get that from this guidance and the comments that they have on their new products. So.
Yeah, this guidance gave me 0. I might have missed the start, but apparently I didn't miss much. But yeah, this call did not give me anything new. Like, oh, we're
Yeah.
at the start of 2025. Give us something. No, nothing. But okay, I guess we'll wait a couple of extra weeks and we should be getting a broader picture here. It's definitely no SoFi or Nvidia or whatnot. It's a boring one that's probably mispriced.
Yes.
And plus,
Yeah,
who
fair.
knows? Maybe by 2030 they would have bought all the outstanding shares available, and this thing is private.
Which is a potential great opportunity as well. Like if you want to hold through that, I mean, do you want this or do you want to keep your cash sitting in bonds or something? I'm sure that PayPal will do very well. But yeah, I know you didn't want to say hood there because I think I bought your shares, but
Correct.
but I think that hood is more where I'm enjoying investing. I find that the rate of change is really exciting.
Yeah, they're frankly they're more exciting as a company too, and they give you a better read as far as what's coming. Like that Investor Day, just that's one of the reasons why the stock is flying. And so PayPal really, I think for the stock to do well, they'll need to continue to outperform and everything, but they need to give a very concrete look at what they're building, the strategy, and where they're going. I think that they'll do that, but we'll find out soon enough. No, I see some people saying, well, anyway, I'm still invested. I'm not selling my shares. I'll be adding it. That's where I'm at, and I'll wait and see for Investor Day before I add real heavy.
Can you see? Like I could see Warren Buffett holding this. Oh, I could have seen him holding it at 60 as well, which is crazy that he didn't end up pulling the trigger there because I thought that was a brilliant play for him. But yeah, there's no fault in being a value investor at all. There's tons of money to be made. The greatest investors of all time are value investors. I'm just young and I like having fun.
And I like having this anchoring part of my portfolio, frankly. I'd like to see the growth more, and I think that we'll get there with advertising, though that's just speculation on my part. But I'm in such speculative names that it will not necessarily speculative, but sometimes extreme valuation or rapidly. It's okay to have something that's a little bit slower paced. That if things fall. And there will be times, I think, this year that we'll see that. I'll be like, oh, man, I'm glad I have PayPal. So,
absolutely. Do you guys want to wrap?
Yeah, I need to get heading.
Yeah.
Neil, where can people find you?
Here.
Right on the Future Investing channel.
On X and on YouTube, Couch Investor. That's the only place. It's a busy day today. I have Google and AMD after hours and Snapchat.
Yeah.
Very interesting.
And Neil is a really good follow, guys. He knows he covers a lot of companies. He knows what he's doing. Only way I can fault him is he sold Robinhood early, but sometimes that happens.
And I also sold Palantir at 70 and now it's at 100. And I thought it would come down, but no, it did not. And I have to live with that decision.
So maybe that's what we need here, Neil. You sell PayPal and then we can moon.
Yeah, maybe. Maybe I'll do that. But I did have my Google and Meta moments, which are up quite significantly. I mean, Meta is up 7x. So.
No, you've done really well, like with your picks, I think.
It's crazy. Yeah. But this is the real test of a good investor. What are your opinions on Snapchat tonight?
I think the stock is up 20%.
It will go up 20%?
Yeah.
You're bullish on Snapchat?
I think it's underpriced right now. I think they are turning profitable. Some reason they're adding more and more users. I don't know why. It's the OnlyFans of the young folks apparently. But yeah, they'll turn profitable. The stock is already so beaten down. I don't like the company, but I think it pops.
Yeah, you're probably right, actually.
Yeah, I think that's a fair way to look at it. I just have a vendetta with that company, and I don't know who is signing up. I don't know all these fake users are coming in, but it's a trash company. It's trash CEO, trash business. But it'll probably bump because I think that a lot of that is priced in.
Yeah. Plus, you get a call option on all the AR, VR stuff they're doing as well, if you're interested in that. But if you're interested in that, you go with Meta and
100%. 100%. If you want that, you go buy Meta, because that's a joke at Snapchat, in my opinion.
Mm-hmm.
All right, those are just my own personal opinions and not financial advice. Neil's probably way more right on being a little bit more level-headed and based there. I think I have a vendetta that will cost me money in Snapchat.
If you're not short, you're not losing money. Huh?
No, I mean opportunity and not investing, but I am not short.
But you have Google, no?
Yep.
Okay,
Yeah.
so they'll be fine tonight as well. I probably believe Cloud is doing quite well.
Oh,
yeah.
Google's cheap. I'm neutral on it, but it's cheap.
Now that the PayPal call has ended, the stock is starting to recover, which is good. So only down 7% now. Not.
It hurt that I might
Got to be
sell.
some sort of bad sign that whenever the CEO talks, every time the stock falls, shock the world, earnings calls. Alex Chris talks, the market hates it, but then over the next 3 months, whenever he's not talking, the stock can recover.
They're just not good at reading off scripts. Speaking like this, amazing, but we don't get as much of that.
Yeah. All right, ladies and gentlemen, thank you all so much for watching. We really do appreciate your time, but bye for now.